Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. I have a lot to discuss. Remember, Powell testifies today at 10 a.m. Just before then, we should get his comments out, and the market could get wild. In addition, key data points coming up. He'll testify again on Wednesday. Wednesday afternoon, there's a 10-year bond auction. Those are now important because of what the interest rate our debt buyers demand. You have to keep an eye on that. And then Thursday morning, CPI. Thursday afternoon, the 30-year auction goes off. And Friday, we have earnings from JP Morgan, Citigroup, Wells Fargo, and the PPI data. So without further delay, let's get right into the action here. Let's take a look at what we're seeing here on the charts. The first thing we're seeing is the chart of the S&P 500 pre-market here. You can see that yesterday we closed right around here, and generally, as to be expected these days, we are gently floating to the upside. We have come down a little bit. You can see general down move, but we're still net positive on the day. Why are we net positive? You guys know. Mega caps, mega cap, you name it. These stocks are lifting. Nvidia's up about $2 pre-market here. That's giving a lift. Apple's about flat, but we're seeing Amazon, Google, Microsoft, and Meta bouncing this morning as well. So we know that carries the market higher. And in general, that's what we're seeing. Now, that could all change on Jerome Powell today, so let's make sure we understand that volatility at 10 a.m. is likely in the market. Now, before we get into anything else chart-wise, I do want to flip over to the homepage. I want to show you guys what we have going on here, and obviously there's a plethora of data here, right? My goal of verified investing is to give you guys the data that the institutions have. That's the goal here. Data and charts. That's what you need to make unbiased, unemotional decisions, right? So one of the things I showed you yesterday, we have the recent insider buying and selling on the homepage right here. All these great articles that go into in-depth things that you may not see in mainstream media. We also have kind of our tweet area where I post lots of my short-term little tidbits and nuggets of information on the market. And then lo and behold, if we scroll down, charts here on crypto, but this is the one I want to focus on right here, guys. This is on the yield curve inversion. I haven't really talked about this in recent weeks, but we do want to take a look at the yield curve and what is going on. So if we look at the yield curve here, guys, the yield curve has now been inverted for the longest time in history. And if you look at the recessions that we have, the last time it was inverted a decent amount was kind of right in the late 70s into the early 80s period. And you can actually track in general the inversion length with the size or depth of the recession, or how bad it essentially gets. And you can see that we had other ones in 2000, a short-term inversion. Now listen, the tech bubble did burst, but really the economy didn't suffer that much. It wasn't a huge downturn in the economy. It was a short recession. Here you had a bigger inversion during 2006 and 7, going into 08. We had a bigger, obviously much more in-depth recession. So again, if you look at this, what we see is that you have a big inversion here that has lasted now the longest time. And even if you go back to the Great Depression, folks, you have never seen an inversion of the yield curve that has lasted this long. So I do want to just point these little facts out. These are little nuggets of information that you can do what you want with them. You can throw them out. You can say, who cares, whatever it is. But don't say that someone didn't warn you when something happens over the next few months or the next year or so. And that's the key, guys. We always want to take our heads out of the sand and at least say that we are well-informed investors in the overall market, even when all these houses and these brokers and all these other players are upgrading the S&P and telling you everything is all good. We know that it's not. We know that delinquency rates are spiking to levels not seen since the Great Recession. We know that we have other factors out there. In fact, many other things that I've posted about here. If we just go down here, 90-day delinquencies are spiking. Shocking 401k plans saw 40% increase in hardship loans. So people are now being forced to take money out of their 401ks to stave off foreclosure. Now think about how crazy that is. Everyone in the mainstream media was telling us, hey, there's never going to be a downturn in housing because there's no supply out there and people locked in rates at 3%, so everything is going to be fine. Well, guess what? All of a sudden, we're seeing a surge of inventory on the market. Here in Florida, there in Texas, prices are actually starting to decline rapidly. And we're seeing people, again, take money out of their 401ks just to stay in their homes. These are the types of things you want to be aware of. Okay, a couple other things to go over real quick here, guys. We have our earnings calendar, generally light early in the week here because there's just not money earnings. Manchester United on Thursday morning, Pepsi, Delta, and Conagra, and then Friday morning, JP Morgan. This is the big one right here, guys. This is the beginning of what we would consider earnings season. JP Morgan, Wells Fargo, Citigroup, Bank of New York Mellon, and Fastenal, which is a tech stock. That's not a big tech stock, but nonetheless one we want to pay attention to because it's kind of the first mover that might give us trading opportunities in something like the Apex live day trading room. All right. Also, if we just do a quick refresh here, I want to just show you this. We do have our economic data right here. So we look at CPI. It shows you everything you need to know. What was last month? What was the expectation coming into the number? CPI year over year, and obviously initial claims, and you can scroll down to see the rest of the data. And then lastly, what I always like to do, guys, is go down to the heat maps. And this is kind of my daily routine, by the way. I'm giving you guys the nuggets of what I do. I look at the heat maps, what's going on. This was yesterday in the stock market. It doesn't open, obviously, or it doesn't start until the stock market opens. But here's crypto. Crypto we'll get into in just a minute. But looking at some of these charts or some of the heat map, you can see generally green. Interestingly enough, I had CNBC on TV this morning, and literally there were bitwise commercials for the Ethereum ETF multiple times, like literally almost every commercial break, which tells me they're getting ready to roll out that ETF. It should be live in just a matter of hours, if not days here. And that again is you're seeing if will Ethereum get a pop. Now, in the service Smart Money Crypto, we're long Ethereum from $125, so good stuff there. And I think we'll sell. Most likely I'll be looking to dump into this because I'm a swing trader and I'm not a long-term hodler. Okay, so just a couple tidbits there. Going back to some pre-market action, we can see just again the chart of the spiders were upticking just a little bit. We're net positive on the morning session. If we flip over to another very important chart here, this is one that we have to continue to talk about, the dollar yen. And again, I've talked about the dollar yen, guys, how important this chart is. Most people ignore it. Most people don't talk about it, but it continues to be one that I look at and say this could be an issue that plagues the market if we see a big spike higher. Now, again, we know that this was your last intervention by the Japanese central bank. Then the U.S. government said, hey, listen, if you guys continue to do this, we're going to label you a currency manipulator. What do we see? We saw initially the drawdown, and look, then we broke out, and then we kind of came back down, and now we're starting to move up. And my guess is you're headed to the high end of this channel, which is where the Japanese central bank will be forced to jump in the currency markets. And remember, how do they jump in the currency markets? How do they strengthen the yen? Well, essentially what they're doing, they're the biggest holder of U.S. treasuries in the world. All right, Japan is our biggest holder of our debt here in the U.S. And so to get what they have to do basically is they have to sell treasuries, which then puts pressure to the upside on yields, right, on interest rates. They get dollars back for those treasuries. They then dump those dollars and sell those dollars to buy yen, which then strengthens the yen. So it's this kind of roundabout scenario here where they just have to sell treasuries, they get dollars back, and then they buy yen with those dollars, dumping those dollars on the open market. And that in general would make the dollar yen go down. That's how you know, by the way. Just so it's a little I can understand the little confusion, but when the dollar yen is going up, it means the yen's weakening against the dollar. When it goes down, it means the yen is strengthening against the US dollar. Okay, so just I want everyone understanding that this is, again, something to watch for. And not only the reason, and this is very important, the reason why you know it's so important is because if it didn't matter, the U.S. would not have come out and said, hey, we're going to put Japan on watch of being a currency manipulator. If it didn't matter, the U.S. wouldn't have said anything. They wouldn't care. They're showing that it's a big deal by saying that, hey, listen, we may have to label you a currency manipulator. Okay, so that's a chart that I'm keeping on my radar here. If we do flip over to the dollar chart here, the U.S. dollar, we can see that the dollar has just been chopping sideways. This is again a misleading factor for many investors. Many people, many Americans look at this and they say, oh man, the dollar's doing well. Why is my buying power? Why when I go to the store can I get so much less in terms of buying power? Why am I buying less groceries for that same amount of money that I was buying a year ago? Look, I mean, based on this year the dollar's doing great. The dollar's up. The key is this. The U.S. dollar has nothing to do with our buying power here in the U.S. it's basically versus other currencies. So with Japan's yen weakening, the dollar naturally goes up against it. And so again, just to understand, it doesn't show us how much buying power we have here in the US. It shows us what our dollar is versus all the other currencies in the world, how it's faring there. And by the way, a great stat that just came out, which is scary, is that number one, consumer credit jumped the highest in 3 months, so huge uptick in credit card usage in just this last month here. That's another stat in the US that's kind of concerning. What is that telling us? It's not even like it's Christmas. Like at Christmas, you kind of understand, right? People are buying gifts, they're buying extra stuff on their credit cards. But to see it in May going into June, that's a little bit interesting there and might tell us something about the consumer struggling. And then you also have situations where the actual wage, the real wages in Japan, going back to Japan, the real wages have declined for 26 straight months. What is that telling us? Well, it tells us that basically as Japan's currency weakens and they import most of their things, their yen is buying less and less goods, which means even people over there that are making, let's say, a little bit more money at a job, it's actually less because inflation is so bad. I mean, this is where the whole kind of system begins to break down potentially. It can get pretty nasty. Okay, in any case, there's your dollar chart right there. I do want to flip over to one I'm keeping an eye on. This is one that we are long in smart money stocks and ETFs. This is Intel. Intel with a great pop the last couple days. The concept here was that every other AI chip stock was running tremendously higher. NVIDIA, AMD, we've seen go up. We've seen SMCI. We've seen, Micron, you name it. All of these other ones were going up. And what we saw was that Intel, after last earnings, got crushed, and it's just been hugging this major technical support area. So the idea is that at some point, people were going to say, oh, listen, this is an AI stock. It's going to get some buzz, and it's going to go up, and that's exactly what we've seen. Now, it does have gap fill. If we zoom into this real quick here, if we zoom into this chart, we can see, again, there is a gap fill coming up right here at 35.15. So 35.15 will be a little resistance, but if it gets through that, you have your next level not until about 30, I think it's about 37 would be your next resistance point. So this is an interesting stock, not so much that it's an amazing company. I mean, it's struggled, let's be fair. That's a reason why it's been beaten down. But just the idea that it's kind of what we call a momentum trade, where other people are saying, okay, NVIDIA's up 1,000%. Okay, this stock is up 1,000%. This one's up 500%. NVIDIA is actually net negative for the year, and it makes it as an interesting idea for kind of catching fire and making it a momentum play. Okay, so that's an interesting one right there, folks. As we continue through, I did want to touch base on Goldman Sachs this morning. Key trend line on Goldman Sachs, if we look at the chart here, in fact, I have to go to my weekly because it's such a far back trend line, goes back to 09. This is a big deal to me. So if we look at this, this was your highest point in 09, right? So October of 09, this was the initial low from the Great Recession, your first initial bounce. Then you connect that through your 2021 highs and look at where we are. Now, that alone gives us something to think about. It says, okay, well, we know that price is into a strong resistance level based on this. In all fairness, look at the fall that it had just off the last hit of this line. So what we do is we say, okay, that's a big time frame trend line. It goes back to 09, so we're talking 15 years ago it goes back to. But what if we go in closer? Can we zoom in and see anything on a closer time frame? And if we zoom in, what we see is that yesterday we put in a topping tail off of that trend line. And I've talked to you guys about multiple factors. How do we get it so that we have not just one trend line, but maybe a Fibonacci or a trend line or a candle formation? In this case, it's a candle formation. A topping tail is a bearish reversal signal. So you have this reversal signal, right like here, right off of that trend line as well. Those are things that as a technical trader, I look at and say, okay, the probabilities are now more in my favor of saying we should expect downside, because not only do we have a large trend line, but now we get the short-term reversal signal in the chart. Lastly, this is more and more what we're looking at here is we want to see the volume as well. Keep an eye on volume. I know Dr. B looks at this almost nonstop. It's really important to see that you see on these reversal candles heavier volume than usual. I don't know if what it was yesterday. I'll look into that a little bit later. All right. What I want to do now, folks, is we're going to do our drawing for our key winner yesterday. So bear with me as we get this up. And there we go. So yesterday it was smart money, smart money crypto is the winner. I talked about how many amazing trades we've had in that service lately. One thing I want to mention on that before I do the spin here is that if you're a good trader, there are periods where you literally do no trades. All right, that's just the nature of it. If you want, you can go and find plenty of information on social media that will pump up some random stock. You'll end up giving half your portfolio down because it's a bad trade. But the reality is the discipline is what makes a trader so keen on continual profits. Always remember that, guys. It's the discipline. So I go literally as a trader, and you can see this in my services. There are periods where I'll have a bunch of trades because a bunch of levels are triggering with volatility, and then we have a high win rate on those. And then other periods where it's just like you sit back and you say, hey, listen, I'm not going to get chopped by the algorithms here or the bots. That's what they're doing to anyone who's trying to get in. They push it up, make you stop out. They push it down, they do back and forth. You have to remember, discipline is everything. All right, speaking of which, let's do this drawing. Last thing I'll mention, don't forget, Investor Empowerment Day is next Monday. Epic day here at Verified Investing. Investor Empowerment Day, the idea of this, and we'll talk about this winner just in a second, but the idea of Investor Empowerment Day is that basically we are evening the playing field. Verified Investing's goal here is to give you the data, the chart analysis on a technical basis, no hype, no nonsense. It is what it is. The data is the data. The chart's the chart. The chart's always right. All right, even if you disagree with it, the chart is the chart. And it's giving us probabilities. And this is what institutions use. They use this data, they use this information to put themselves in the position to win. And my goal is to make sure that that playing field gets evened. And that's what Investor Empowerment Day is all about. All right, the winner today, Abhishek Kumar, 2535. Congratulations, 3 months of smart money crypto is yours. Reach out to support@verifiedinvesting.com. All right, on that note, follow me over here. We're going to do a quick spin of our wheel. And on this front, we'll see what the winner will get tomorrow. And don't forget, guys, if you are a sponsor and you want to essentially be on this wheel or as a sponsor of Verified Investing, just simply reach out to us at support@verifiedinvesting.com. 1 minute scalpel, beautiful. 1 minute scalpel winner is the tomorrow winner here. So 1 minute scalpel, just to give you a rundown of what it is, it's trading the short time frames of 1 minute with amazing technique and accuracy. By using this technique that's taught in this, it's remarkable at the win rate. And literally, we've had people that have said to us, I took this course and now I'm knocking it out at like an 80% success rate by trading off of the 1 minute chart. So even if you're not going to win this tomorrow, I would strongly recommend at some point use Investor Empowerment Day as a day to say, hey, listen, I'm going to improve myself. I'm going to learn techniques that the institutions only have. They don't want you to know. They are here in a lot of our courses, and that's the data point. Okay, on that note, we're going to talk just briefly about the Apex Live Day Trading Room in this 30-second break. We'll be right back. Hey everybody, welcome to the Apex Live Day Trading Room, where you're getting multiple pro traders with decades and decades of experience calling out trade signals as well as their own trades, entries, and exact exits for you guys over your speakers on your computer, your phone, your iPad. In addition, you're going to see our screen. So you're going to see, as we move our mouse on the screen on the chart, all the data, all the information that we're doing as we're making money as traders. We are translating that to you guys. Lots of education, literally from 9:30 to 4 p.m. with a small lunch break in between. Everything you need to make money as a day trader right here at the Apex Live Day Trading Room. Alrighty, guys, we are back here and we are back in action, and we're looking at Bitcoin right here. So right away, we go right back into the charts, and Bitcoin basically is seeing a little bit of a bid again. Nothing crazy, nothing to write home about. We did see that flush below. Remember this channel that we were talking about? How, and again, I love doing kind of reverse. I almost wish you could play back that video from, let's say, last week when we were talking just before the Bitcoin collapse. But it is remarkable how you can see here that, and I'm going to erase this white trend line. I'll tell you guys about that in a second, how Bitcoin was above this range, right? So it had broken out, right? Broken out, and then it came back, tested, and then this is where things started to go south for Bitcoin, is that when you break out above a wedge, let's do a little diagram here. Here's your wedge, you break out, that's a breakout. It should continue to go up. Okay, what happens is when you break back in, that's now called a failed breakout. And one of the epic rules that I've learned in trading is that when you get a failed breakout or breakdown, the move in the opposite direction is usually pretty dramatic. And why is that? Let's talk human psychology right up here. The idea is that you had a lot of people jumping on board when it was up here, right? It was a breakout, it's broken out, it's going to go to new all-time highs. When it doesn't, and it comes back in here, investors are like, okay, I bought up here, it's still okay, I'm still giving it the benefit of the doubt. This is what they're thinking. But when it breaks here, they throw in the towel. And you get all these people that bought up here. Well, not all of them. Some of them still holding, obviously. But a lot of these up here, they end up dumping. And that's why you saw such a dramatic drop down in this range. Now, there are still some people that are buying down here. Heck, I covered half of my short. We bought Ethereum. We bought Matic. We bought Polkadot. We already unloaded our Polkadot for a nice gain. We bought Uniswap, unloaded that for a good gain. But the idea is that ultimately now you're at a reset where there's a lot of people buying here, and it's chopping, and can it continue to move up? If it breaks here, right, 52,000, it's going to get another flush because people will say, uh-oh, here it goes again, and it's going to flush. And that's where that 50 to 49,000 target comes in. That would be your next technical level. Now, speaking of which, let's just talk about our current levels because, again, these are the levels we want to follow. We zoom back out a little bit. You continue to have support at 52,000, give or take. 52 to 52.5, we'll call it right there. If that breaks, this is your 49 level. I'm taking the 49 level as a technical level because previous major pivot tops become major supports on the way back down. So if we look over here, and I actually have to zoom out a little bit to show you guys this, bear with me here. Let's do that there. If we zoom out just a tiny more bit here, we can see that the reason why I'm utilizing this is because one of the technical analysis principles is that a former major high, and this was a 20% correction off of the ETF approval, that now becomes technical support. So it got rejected here before it broke out, and now that becomes support on the way back down. So if we do dump 50 to 49,000 should be major technical support, if for no other reason than a technical bounce for us swing traders out there. Now, if it breaks that, that's where the trouble starts. Once you get below that, you might be headed back towards this level. I'm not saying that's going to happen. In fact, I will be a buyer around 50,000 or a break of 50,000 on Bitcoin. But as a trader, we always have to watch both sides. Like if I'm long something, I need to be looking at what happens if it doesn't work out. Where are my levels to either add or exit the trading opportunity? If I'm short something and it breaks above, what am I doing? How am I maneuvering in that trade to try to still make it a profitable trade or cut it at a small loss? And so that's important. Many investors, they kind of do the whole put your head in the sand thing. Like they go long something and then they're like, hey, listen, I don't want to hear anything negative on it. No matter what, nothing at all. Just tell me the positives. And it's like, okay, well, yeah, in a perfect world, that would be the only thing that happens. But in real world stuff, you have to be ready for the opposite to happen. It's kind of like in life, preparing for no matter what happens. Like you lose your job, this is what you do. If you do this, this is what you do. You have to have a game plan just like these game plans in the morning are for you. Okay, so that's just a couple little tidbits. We know our levels here on the upside of Bitcoin. We're looking at 60,000, this reversion to the trend line right here. It's around 60 to 61,000. That will be our resistance level. All right, couple other charts here. Gold is getting a small bounce. We did see a reversal yesterday. Doesn't matter. Yeah, I mean, it's still slightly, that is in a short term a bearish reversal, but we broke and confirmed above this zone. So all that tells me is at some point we likely come back into this level, and watch that Jerome Powell testimony today at 10 a.m. because it's very likely that will be a key right there. All right, and I will be a buyer of gold if we come into that level. Same thing on silver. Broke out, it confirmed, so downsloping channel, broke out, confirmed. Now any sort of retrace into this level becomes support with an additional add level right down there. Those are your technical levels to look for support. And of course, oil, guys, which continues to have a little decline today. This was a level, probably one of our more high conviction setups here, as I've talked to you guys so much about it. Triple threat right up here. Major trend lines coming together as resistance. Oil has now pulled back and is pulling back today again. You will have some support around $80 right here. But ultimately, I would expect a small bounce and then further downside. I talked about the macro data here. The macro data is weakening globally and domestically. That'll eventually bring oil down. That's just the nature of the beast. Lastly, natural gas, guys. Small bounce yesterday, small bounce today. Little down-sloping trend line here that's giving it a bounce. My buy level is still a little lower, so my guess is this is kind of what we're going to end up doing. A little bounce and then a rollover, and then I'll decide if I want to play it on the long side off this key level. It's a 618 Fibonacci from this low here to that high, and it's also this trend line area right here, this kind of flat top, flat surface right in that space. Okay. All right, guys, it's been a busy morning, but it's awesome here at verifiedinvesting.com. I'm going to head over to the Apex Live day trading room, put on my headset, be showing my charts live, telling my trades with Dr. B and Ben, my two head traders over there. I do encourage you to check us out. And as always, folks, I'll be here at Trading the Close at 3:55 p.m. to crush it and tell you all about today's action, including Jerome Powell's testimony. You guys have a great rest of your day. Thanks for tuning in. As always, I'll talk to you soon.